We are back. The Africa Business Agenda report was today published by PwC, looking at 171 CEOs in Africa. What are their sentiments? Now, we're trying to tie this into what are investors thinking. Last week, we were looking at investor sentiment. Today, we are looking at what are the CEOs discussing. Rolly Kipkemoi is an equity analyst with Nabo Capital. We have Rolly in studio to just help us tie in. This is what the CEOs are saying. What does that mean for the investment case for Kenya and other sub-Saharan African countries? Rolly, welcome to the show.
Thank you so much, Mbele.
I don't know if you've had a chance to look at this report. So we're seeing that sentiment, business sentiment is more, it's neutral. It's bottoming out compared to last year. Nothing much has changed sentiment for the medium term. What does this mean for you as an investor when you're looking at Africa?
For me as an investor, that would be a bit concerning for me.
Okay.
If CEOs who are on the ground in the different countries are a bit neutral, or even you can say negative. You know, whenever someone says I have a 50% chance of achieving it, then you should put a discount to it.
Okay.
So maybe you'd say, for you, you'd say, let me use 30% instead of 50%.
You're very punitive with your discount. Okay.
Yeah. So if the majority of the CEOs are saying neutral, then I'd say that's pretty negative, and therefore for me it's concerning. And looking at the markets, pretty in line with that, but I'm sure maybe we'll discuss that.
Okay, no, I mean, when you say markets are pretty much in line, what do you mean by that, Rolly?
If you look at some of the key markets in Africa today, Kenya is down negative 13%, focusing on the NSA 20. Nigeria, similar number, about negative 12%. BRVM, which is Western Africa, Senegal, Ivory Coast, that area. Similar number, about negative 13%.
Okay.
With the only two markets, one of the very few markets that are positive, at least the major countries being Egypt and South Africa.
Okay, what is happening in Egypt? What is the performance today?
About 14%.
Wow, what is driving that?
Well, I can say first, there is some structural reforms going on in the background, and therefore investors are taking that as something positive. We saw the inflation numbers tick down.
Okay. What is inflation now?
About 7.4%.
That's a huge improvement.
Huge improvement compared to hardly about 3 years ago, where it was north of 20%, or close to 20%. So you can see the reforms the government is really taking, trying to ensure that there's growth not only at government level but also to the local citizen down in the country. Okay. That growth is felt, and therefore they tie down that positivity to them.
Okay.
Yes.
All right, that's very interesting, and I will come back to that. But let's just circle back when you're talking about sentiment. Now, the PwC report does allude to a couple of things. It does say that at a global level, sentiment is not expected to change much. There will be a slowdown with regards to growth. However, on the flip side, the sentiment when you're looking at Africa, we would be worse than we were last year. In the short term, in the next 12 months to 3 years. So we are not getting worse, but we're not necessarily getting better. And maybe our graphics team can just help put that up. When you're looking at Africa as a continent, does what is happening at a global space, especially with geopolitical risks, actually affect your sentiment and investment decision in Africa or in Kenya?
Well, I can say over time it has become much more critical to ensure that whatever happens at a global level, we really take that into account. Previously, you'd say there'd be a lag between sentiments, rather situations happening at the global level and them impacting the continent. Okay. But where we are right now, and I'm sure it's going to be even much more tight as we go on, that spread, or rather that gap between the situation happening and impact, has really reduced. It's very critical right now, because if you think about global supply chains, Africa is becoming a critical point, or rather a critical region where business happens. Maybe some cars manufactured in Japan are imported to Africa, or computers manufactured in China imported to Africa. So it is quite important. If say what happened recently over the weekend,
and this is oil, and the surge in oil, as well as the attack on Saudi Arabia.
Yes.
Actually, what does that mean for the continent? Are you concerned as an investor?
Well, 10% increase in oil in a span of about 3 days, actually overnight, is something worth us noting. But if you look at a more long-term perspective, over the past, say, 18, 24 months, oil has been operating between $55 per barrel to about 70. So I'd say it's still within bound and nothing.
Okay.
If it would have gone to above 100, then maybe then.
Then you'd have been concerned.
But now it's still within bound.
Okay.
Yes.
So what you're effectively saying is really what the CEOs are saying. Like there will be geopolitical concerns at the global level, but you really don't have control over this. But then the question is, how do this potentially impact your business and your investment case for the African countries? So in other words, expect short-term volatility. If you're looking at African markets, does that actually apply for you as an investor?
Yes, it does. Every time Trump tweets something, at least whether whether you're looking at the Eurobond screen or you're looking at equity screen, at least the major counters move. If you're talking about Kenya, then you certainly expect some impact on Safaricom. If you're looking at Egypt, maybe Komi.
Yes.
Or Nigeria, some of the big counters, but Nigeria is now a very special case right now. Some structural issues.
What are the structural issues? Because you're saying the structural reforms in Egypt have actually delivered positive growth. But then you're saying on the converse, in Nigeria, they need structural reforms. What reforms do they need?
One, I think they really need to do something about their tax. Nigeria is such a big economy, but for some reason, the amount of money they collect through taxes is really constrained.
So really, you're telling me our tax base is okay, so Kenya is doing okay?
Well, relatively to Nigeria,
we are doing
I think
better.
Nigeria should be way ahead compared to where they are right now.
Okay.
So, that would remove their dependence from oil and other factors, and maybe have tax contributed by the citizens being a critical factor in the economy.
All right.
Yeah.
And that's very interesting. I think we'll have our graphics team just put up graph number 3, because the CEOs, again, interviewed in Africa, what they're saying, the key 3 risk factors, there's policy, there's overregulation with regards to task, and there's also the element of skills. They don't feel like they have the requisite skills. What does this mean for you as an investor in African companies?
Well, the first one, policy,
yes.
I'll give Kenya as an example. A lot of investors took a step back, especially over the past 2-3 weeks, waiting to see what would happen with this interest cap law. Many people saying different things, but you see, you don't really know what the stand is. Some MPs are for it, some members of parliament are not for it.
So that uncertainty.
Government is for it.
Yes.
So how do I proceed from here? If I was a player in the banking sector and I perhaps want to make an acquisition, and there is something very critical being discussed right now, and it's not very clear on what's going to happen, that will definitely be a source of concern for the individual. For the other item being overregulation,
yes.
Let me pick Safaricom again as an example. The regulator has been really trying to hit the company with all manner of regulations,
Okay.
Competition, and the like. So I'd go to Nigeria. The CBN wants to,
This is the Central Bank of
Nigeria.
Nigeria.
It's Central Bank of Nigeria. They're sort of trying to force the banks to lend. And you see, banks, they need to have their own independence in as much as, yes, they need to meet some measures.
Yes.
The day-to-day operation should be left at the discretion of the board and management.
Wow.
The regulator is just to guide.
Just guide, but not to overregulate. Okay.
So if you try to ensure that my loan-to-deposit ratio minimum is 60%, and my view is that NPLs in this economy will skyrocket in the next few months, then why are you trying to force me to, give someone else money that should have brought me profit?
So it's also something that's giving you a headache. But let me ask you, really, if I flip it to the other side. So there's the things that are external to the operations of the companies in Africa. But ultimately, the consumer and the share of the wallet, how much is going to what particular company, that's ultimately what matters. Do you think the consumer is affected by what is happening with regards to uncertainty on regulation and government operations, government public policy, fiscal policy, monetary policy? Do you think these are things that actually impact consumption of goods or services in Africa, and especially in Kenya?
Well, if you look at the consumer wallet, we could discuss what are the key items being
consumed.
Being consumed. first, I'd say in the African context, food, of course, is a very, very big impact.
You must eat in Africa.
Last week I saw a headline
yes.
that I don't know, some farmers in North Rift are complaining of maize that is coming into the country.
Okay, and that's a government policy tying into local business operations.
Yeah,
okay.
The cabinet secretary a few months ago had mentioned that the government is not going to do that, but now we're seeing
maize coming in.
All
right.
Yeah, so you see, if the CS had probably held to his ground and no maize would have come into the country, then potentially we wouldn't have seen. So if you noticed, I think the bag went a little bit higher, either to 125 there, but still not so bad as what we saw about 2 years ago.
Okay.
That's one. If the government does not really stick to its word,
then it
will affect the consumer one or another.
Okay, so it's just a matter of time before the consumer can stop. If I have 1,000 shillings and my 1,000 is not growing, at some point I have to let go of some things that I have been consuming.
Potentially.
Okay.
Yeah. The other item is we've noticed your data, the amount of money individuals spend for airtime and data has really sort of grown over time. With the importance of communication in this time and age. Right now, if you compare the student in 2010 and the student in 2019, the student now will require a huge amount of data to access the same information that individual would have accessed.
I mean, really? So you're saying you lose some, but you gain some?
Well. Over time, yes.
Over time, yes.
Over time, yes.
Okay. So if this is what is keeping CEOs awake, they're saying they're very uncertain about policy. What would be keeping you awake as an investor?
Myself?
Yes, in Kenya, actually.
You see, you are making an investment in an environment. It's not a closed closet. So you not only need to be aware of how the business is operating, but you also need to bear in mind that business operates in a particular environment.
Okay.
So both the company's fundamentals are critical, but again, this company does not operate with itself. It has to operate with individuals in that country. And therefore, if individuals in that country are not doing well, or rather the amount of money in their pocket is not increasing, then that's a source of concern for me. But I'd say for me as an investor, the most important thing, of course, is how the business operates, and then the second level of concern is the external environment.
The external environment.
How is the sector performing? How is in terms of sector, how is that business performing compared to other players? How is the regulator in that country? Is the regulator an enabler or an oppressor?
Okay.
Yeah,
enabler
or an oppressor.
Fantastic.
So yes,
all right.
But you can say focus more on the business first.
On the business.
Then if the business makes sense, then let me look. Is it in the right environment?
Yes.
I saw a meme yesterday. Are we going to talk about memes here?
Yes, please, go for it. We love memes.
I saw a meme that if you put a baby shark, something in a, what do you call that? In a fishbowl. In a fishbowl, it will only grow 8 inches.
Fantastic. Okay.
But if you put the same shark in an ocean, it will grow 8 feet long.
So right environment.
Yeah.
Right environment, and the government has a role to play.
Okay.
Rolly, just as we come to the end of this discussion, from this particular report, the sentiment was this: the 12 months, the short-term volatile, not too much upside with regards to business growth and sentiment, but then in the 3 years, about 3 years from now, then expect a positive cycle with regards to business outlook. What does that mean for you as an investor? So are you positive about investments today or in the longer term? And if so, what particular assets would you be buying, or are you buying?
Well, maybe I'd want to challenge that sentiment first. Maybe 3 years from now, that's when maybe things will be bad.
Political cycle.
We are in it. If you look at most of the countries, we're in a tough condition right now. If you look at globally.
But truly, even though there are politics, let's go back to the element of food. even though the politics are here, the question is, I still have to buy that packet of unga. I could possibly be buying it at a higher price. But because politics are happening, I don't stop consuming. I don't stop going to school. Maybe I stop doing the luxury things, but the basics I need to still continue doing. I can't hold my breath till they decide who the next president will be.
Well, that's true. But if you look at generally, globally,
there's a slowdown.
We have 2010 up to about, when was the last rally in Kenya? 2017?
Yes, actually before that, way before that. For the markets?
Yeah, for the markets.
Slightly before that.
2017 we were in the money.
Okay.
Quite.
Okay.
Last year wasn't.
So it's an important factor, in other words.
So we were in that circle.
So for you as an investor, your good times are not in 3 years. When is your good time?
Maybe
when is your best time? In a year?
Maybe a year from now.
Maybe a
year from now.
All right.
3 years from now.
Which means that you should be buying stocks today.
Be there. Some stocks.
So
but in the environment we're in right now, the decline will support more of a shift to fixed income right now. But
so fixed income assets.
Fixed income assets.
Lend money to the government.
Let's pay attention to equities, where they're heading.
Okay.
If you see some positive sentiment, try ride that wave. Selectively.
All right.
Because you don't know when that will stop or when the decline will come.
All right.
Yeah, but for now, you're probably safe in FI.
Okay.
Yeah.
Is there anything else that we need to consider on investments just as we come to the end of this section?
Currency.
Currency, all right.
As you make your investments, you definitely have to pay attention, because one of the other factors that concerning the CEOs, other than policy,
there's currency. Okay.
Yeah, so you have to pay attention to that.
Okay.
Because if you're a South African company and you're in Nigeria and you're shopping, you're closing shops. Should I say names?
Yes. it's okay. So currency is something that is also pertinent over and above sentiment.
Yes.
Thank you so much for your time. So that was Ronnie Kipkemoi. He's an equity analyst at Nabo Capital. We have tied in his perspectives with regards to investing in Africa and Kenya. He more or less agrees with this report. But what I find very interesting is the divergence with regards to when is the best time for investments. Could be in 1 year's time, but then you also just need to be selective. If you're looking at equities, you absolutely must be selective. You can't just go and pick everything. It's cherry picking season. Outside of that, then it looks like there's actually more potential and upside by lending money to the government, and this is fixed income assets. So for the CEOs, they think that they could potentially see a better environment in 3 years, but the investors, they go ahead of the CEOs. So there you have it, at least from the investment perspective. We'll go on a short break to look out for the NSE closing bell. Thereafter, we will be interviewing Mr. Peter Nga, who is a senior partner for PwC in Kenya and in East Africa. He'll be summarizing what are the CEOs saying, and look out for that. Just tie that element into what the investors are saying, and you can be able to articulate your own personal investment case as well as begin to build your portfolio. Thank you for joining us. We'll see you shortly.